Hello, hello. Good morning, everyone. Hopefully you can hear me. Hopefully we've got our tech sorted today. Let me know in the chat if you guys can hear me. Welcome to another Wealth Coffee Chat team, folks. Good to see you guys jumping on this morning. I think everything seems to be working all right. Hey, big shout out and a good morning to Alison and Brendan, Graham, Jeff, Riley, Chris, Alexis. That's great. Thanks, Riles. Mate, off to the races. Morning, Sharon. Well, team, hopefully you're awesome and well. Welcome to another Wealth Coffee Chat. Like I said before, I'll do a few little bits of intro while things are warming up. Jason Witten's my name. Most of you know that already. If you're new to mentoring, if you're wandering by, say a quick shout out, say hello in the chat. Hey, Deb. Morning, Deb. Hey, Deb, we got to get together. We've been trying to lock that in. Let's try and do it. There you go. Hey, what's been happening out there in the marketplace? The old media's winding up, isn't it? The old media's making it happen. Yeah, some of these politicians, Jeff, hey? Like I tell you, it's like watching a train crash, a slow train crash. But anyway, you know, as we all know, as investors, they can be a bit crazy, these pollies, and they can come up with all sorts of weird and wonderful things to try and get re-elected, try and get the popular vote, whatever it might be. And for us as property investors, you know, we get treated pretty unfairly sometimes, I reckon. But you know, you can't stand around whinging about that stuff, can you? You've got to make sure, as a property investor, you have strategies, processes, systems for you to make the most of what you got and ultimately build your property portfolio. Because for all of us, you, me, everyone who jumps on this channel, all the people in mentoring, you know, we've chosen consciously to make real estate our investment vehicle for the future. You know, you guys know that I love property investing. It's slow, it's steady, it's methodical, it's consistent, it's reliable, and there's some other benefits to it as well. Some of the challenges with real estate, you know, it's slow, you know, and, you know, it's exposed to political issues. No different to any other asset class, I don't think. But today I wanted to talk about, are we entering a risk zone, team? Are we entering a risk zone when it comes to the property market? And maybe, you know, what do we do about that? For me, for you, all of us, as we get, you know, our mojo on and build our property portfolio, you know, we have some good times, we have some average times, we have some rubbish times. All of those times have to be navigated, not only financially, which I think is the easiest part to do, but mentally and emotionally as an investor. You've got to be able to go the distance. You know, you guys know I've got a couple of sayings around here. You know, buy well, never sell. This thing's a marathon, not a sprint. And it takes time. It takes mental and emotional fortitude to go the distance. Over time, you know, this is going to take us 15 plus years, folks, to build a significant property portfolio from scratch. And get a good outcome from it. So, you know, if you're there and you're just starting out, you know, make sure you pace yourself. If you're part way through and you're kind of like, is this going to work? You know, hang in there, stick with it. And if you're all the way at the other end where you're like, this is working, this is great, now how do I exit efficiently and tactically and smart? And I mean, exit from maybe the workforce or something. Like, how do I turn my portfolio into this cash flow machine, this unicorn that everyone talks about? Well, I'm not going to talk about that today, but I'm going to talk about this today. Hopefully that's where it's going to be over here for you, me, everyone else in our futures. So let's have a talk about the risk zone and what's going on. Unless you've been living under a rock, and hopefully you haven't, but if you've got yourself a bit of real estate, you know, what has happened in the past, let's say, 2 to 3 years? Tell me in the chat, what's gone on with our real estate market? You know, what have we benefited from in the last few years? Chuck it in the chat, get you guys engaged. this one should be a pretty easy one to answer. What's gone on, team? What's happened? What have we benefited from significantly? The Australian property market, capital gains. The Australian property market has gone up. We've had some boom times, Brendan, for sure, and it's gone up in trillions. And I mean, that's with a T, team. Trillions of dollars of value around Australia. And it's put a significant amount of growth and equity into people's pockets. Well, not necessarily pockets, but we've participated in what I call a reward zone. Okay? Now, the reward zone for me, for you, is that number one, we purchased real estate. We kept it and owned it and maintained it. And then we were part of that marketplace. We were part of the game when whatever forces came together and gave us some growth. Now, happy days. We should have equity dollars in our portfolio right now, which is great. That's what part of this gig is all about. The challenge is what I find with property investors, especially if you're new, if you haven't been around here before, this is kind of something that you've got to be careful of, because what if you invested in the last few years, all you know is things going up. That's all you know, okay? And you buy a property and everything goes to plan, all right? You're like, it worked, I'm a genius, I bought it and it went up in value, ta-da. Now, tell me, team, chuck that in the chat. It took 10 years to happen. You're dead right, Alison. Absolutely took 10 years. So we've had 3 years of good growth. We've probably had about 4 to 5 years of flat. And we've had probably a couple of years maybe of negative overall, not every property. And that, team, is the market cycle. It's a 10 to 15 year cycle of doubling in value. Sometimes it's a bit more, sometimes it's a bit less. But let's work through this, right? Hopefully most of you know that this is not normal. This is not something that happens forever all the time, okay? So we've purchased our properties, we've had a bit of a reward, we're happy days, all right? What's going on right now? What's starting to happen out there in the marketplace, all right? Put that in the chat. And not necessarily the marketplace, but in the media place. The media, what are they doing right now? They can't bloody help themselves, can they? A real pain in the neck, this lot. They're doing crap like this. Price falls in Sydney, likely to accelerate after hitting their peaks. Could fall by 15%. Blah, 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 blah. What a bunch of rubbish. Let's face it, folks. These guys, there's only one thing that they're after, and that is clicks and attention. Okay? Unfortunately, I've been reading a book actually, which is pretty interesting because it confirms a significant amount of the things that I've thought about the media for a long time. Called Stolen Attention. I'll give you that. Yeah, clickbait news, team. Clickbait news. This stuff manipulates our brain's amygdala, okay, our fear or flight, our fight or flight mechanism in our brain. We have unfortunately, a negative news bias. Something that's negative will get more attention. We will pay more attention to it as humans than something that is positive, okay? Which is so annoying, right? So now what will happen in the marketplace is that this rubbish will get a bit more attention than it bloody should, okay? So the scaremongering, the clickbait, the rubbish going on out there in the marketplace, for all of us, we need to understand what is for real and make sure we check back in on our portfolio, our system, our opportunity to build our equity as we go along. This is what I call the risk zone. there is a risk zone in there. Now, what type of risk, team? What type of risk, real risk, if you're a property investor and you're a property investor that is going to invest, and be committed for the next 15 to 20 years, what real risk is in here? Tell me what the real risk is of this section, okay? So chuck something in the chat there. We'll talk about that in a second. But what is the real risk? What is the real risk to you and me as property investors, long-term, professional, focused, eye on the prize property investors? Well, for the ones that are, selling out of the market. You get the fear, you get out of the market at the wrong time. You lose money, you sell at a loss, you follow bad advice. There's I remember there was Professor Keane. I can't remember his first name. I don't know if anyone not staying in the game. Exactly, Chris. You can't win the game if you walk off the field. Seriously, team. You're playing whatever sport it is. I don't know, whatever sport you play. You play and you only compete when you're ahead. What? That doesn't make any bloody sense. Sorry, now I'm not winning, I'm going to get off the field. Where in human endeavors does it say that the moment something's not potentially going your way, and I'm not saying that that's the case actually, because stick with me, I'm actually saying this is a bunch of bullshit right now, but the moment it's not going your way, you should get out, run away, sell my property, it doesn't work. Oh, are you kidding me? All right, but the media wants to scare the crap out of you. They don't give a rat's ass about your financial future. So stop paying attention to that rubbish, okay? So the risk is you pay attention to people who don't give a shit about you and people who don't own real estate and don't really care what happens to you financially, all right? So let's not do that. Let's not do that, team, okay? As we go. What is the real risk in here? Well, the risk for us as property investors might mean that we miss an opportunity, because this becomes an opportunity market. And what do I mean by that? It's an opportunity to purchase better, well-priced, better positions when more people leave the market, okay? So right now, when the market's going up and everyone's excited, there becomes a little bit more competition that you would like as an investor often, okay? A bit more competition. Now over here, when the uneducated, the fearful, the good time Charlies, the short-term investors get out of the market, this is often an opportunity to buy and buy again well, okay? And we love this idea. At the end of the day, team, you might end up doing things like this. You might buy your first property in a rising market. You might buy your second property in a flat market. You might even buy your third property, maybe it went down a bit. And then you're buying your fourth property, over here on the rise, okay? For you and me over a 15 to 20 year period, waiting around sometimes years to build your portfolio is the danger, okay? So the biggest danger in there is probably what Chris said, and whoever the Facebook user is getting out of the market, okay? This idea that you said, all right, I was going to invest, I'm going to stick with this for 15 or 20 years, and at the first sign of the interest rates are going to go up, so what? Who cares? Put your rents up. So what? Your buffers put aside. You do your tax deductions. You follow all of the strategies and processes that you know you need to, and it will be perfectly fine. If you have your plan locked away, you get some coaching and support to go the distance. The big risk is mostly mental and emotional here. Because if you let that media get to you mentally and emotionally, then what will happen is you will have dollar risk. Dollar risk from bad decisions and poor mental capacity to keep going. let's talk about this in reality, though. Right now, I don't think that this is going to be an issue for long, if at all. Now, there might be some temporary issues when we see the market adjusting for the new pricing of cash, okay? Interest rates might go from 3% to 4%, okay? They're already going up, team. The interest rates have already gone up. I've got something here, actually. Where is it? There we go. The banks are already pricing in interest rate rises themselves. So they've already done it, team, for us as we're borrowing. The media didn't have to carry on like pork chops about it, okay? So this risk zone, I think, is a non-event right now. Why? You tell me why, guys. Right now, what is on the other side, which I think this risk zone will probably do something like that. I think it might be flat, and flat only because of political uncertainty and uncertain about where the interest rates will be. The quicker those interest rates knock into shape, the better off we're going to be. There might be some slowing down, but what is underlying our property market in Australia right now? You guys tell me what is actually happening factually right now. Supply and demand is absolutely stuffed. All right, buffers will carry you through and then put your rents up. Okay, team, make sure you say you get your taxes back. Supply and demand, we are at like literally decade lows of supply. We've got unemployment, the lowest it's been in 40 years. Okay, lowest unemployment we've seen in 40 years. Hang on, I'm going to sneeze. How funny was that? Anyway, lucky I was able to mute myself. Supply and demand is buggered. Lowest supply in 40 years, lack of stock, exactly. We've got a massive, and I mean massive, population boom coming. On the cards, 600,000 people to come into Australia. We've got extremely low, record low vacancies. Low vacancy. Okay, record low vacancies, and the cost of construction is up. Construction is up and won't go down. Team, the delivery cost of properties, the cost of land, the cost of labour, the cost of materials, none of that fundamentally will change. Matter of fact, it might even go up a little bit in the short term because of some of the constraints we've got. All of these things right now is pointing to the risk zone is really what can we absorb when it comes to the increase in the cost of our cash, and quite economically, the average Australian is actually pretty well off right now in comparison to where we were a while ago. Lots of money in redraws and equity, lots of cash, record savings in cash in savings, etc. So for me, for you, is any of this relevant right now? I think the relevancy is this, team. This risk zone is going to be low and short, low amount of risk, short amount of time. It could be a fantastic opportunity, a magic opportunity for you to see this kick on, the marketplace get a second wind, an excellent second wind. And I think in many awesome cities around Australia, there will be a second wind, especially when rents start to skyrocket and that population starts to grow in Oz. Anyway, there you go. That's about it from me today. Any questions, chuck them in the chat. It's always good to get some feedback from you guys about, what's on your mind when it comes to these morning Wealth Coffee chats. Usually I just wax a bit of lyrical about something I've seen of recent times, but if you guys have got any questions, if you guys got any concerns, you guys got anything you want me to talk about, leave me a comment in the chat and we'll grab that and do something about it. All right, Keem, that's it. That's it from me. Done and dusted, 8:30. Usually try to finish about then. I know everyone's got stuff to do to get on with their day. You guys be awesome, be well on this terrific Tuesday. Wonderful Wednesday tomorrow. Join me about the same time, about 8:10, for another Wealth Coffee Chat. Till then, team, you guys know the drill. Buy well, never sell. Because this thing's a marathon, not a sprint. We've got to go the distance. All right. Take care, team. Bye-bye.